Well, welcome back to the National Real Estate Cafe with Don Gedling and Gino Fronte, where you get your daily dose of real estate and financial market updates and so much more.
All right. Well, today we're going to talk about something that's always on our minds when we're looking to buy a home or refinance our home or a car or anything is interest rates.
And they talk about it on a regular basis because all you're hearing is the feds are raising interest rates. So how does it affect you?
It's a little bit of propaganda, isn't it, Don?
It is. Again, it makes everybody fearful. Oh, no, they're raising rates. Yes, has the Fed raised rates? But that is different interest rates. Those are car loans, HELOCs, or equity loans on your home.
Overnight bank lending.
Yeah, I mean, basically credit cards. So it does affect you, but it is not directly proportionate to home loan interest rates. And even those did have a little spike up. We're going to show you a little chart. This gives you some good news.
Let's take a look. All right. So what they're doing today, and I know what you really wanted to focus on, is that the spike was short term. It was rapid. We had a rapid rise in interest rates. But then we see some cooling and a little more stability. And that's typically what happens, right? You've got some catalyst that brings fear to the market, and all of a sudden everybody sells out of their bonds.
Yes.
And then it's like, oh, well, the market's not as good as we thought, and maybe there's this and maybe there's that, and things start to cool off and normalize a little bit.
And just so you're not confused, you're looking at the chart going, wait a minute, rates highest ever, and it looks like it's the lowest in the chart. This is inverse. Basically, that means when it's lowest, that means everybody's selling their mortgage-backed securities. Therefore, to attract more people to buy these bonds, they have to raise the interest rate. So when everybody's selling, rates go up. So that's why you see the bottom of the trend is where rates are higher. You like the green. Green is good. People are buying mortgage-backed security. Therefore, the rates don't have to be as high to attract buyers. So I circled this little area saying you can see that we've been trending pretty consistent, and it's consistent with what rates we saw in April.
Yeah, and if you look at that, those rates are, just to translate this into interest rates for you, those rates that we're seeing today are in the mid to high fours.
Right.
That is still some amazing interest rates. If you look at historical interest rates averaging above 6 for sure, and closer to 8 in some cases.
Yes. So the also factor is don't get too complacent. Rates are still wonderful, and rates, again, always affect your cost to buy a home more than the price of the home. So
they still are 1% higher than they were, say, 2 years ago or so on average.
Yeah, it was a while ago.
Yeah.
But they're still, like Gino said, historically some of the lowest levels. We're still in the 4s in most cases, low 5s depending on your FICO scores. We got great rates. Take advantage now, and take advantage by getting these sent right to your phone by texting NREC to the number 58885.